Good morning, it's Jonathan Barratt with the morning debrief. It's the first day of spring, September the 1st. The current time is 7:44. Okay, let's get right into that. Let's get right into it. Let's just tidy up a few things here. Just a little bit of movement. Let's see what's happened on the overnight. Just have a quick overview, and then we'll get into some of the markets. Okay, the Dow was up 4 points at 10,014. The S&P was up 0.41. Nasdaq was down 6 points, 2,114. In Europe, the Stoic was up 6, the FTSE was up 23, and the CAC was up 3.78. The DAX was up 12. Local market seemed to close quite positively. On the futures market, it actually closed up 41 points, or close to 1%, at 4,428. So that was quite encouraging. We do have some good data in Australia. GDP, the market's expected a better than expected number, up 0.9%. So stay pretty close to that. That comes out obviously this morning. Righty-ho, let's have a look at just the usual things we look at. And I guess the most important one there is the dollar index. Dollar index just moving sideways. We're not getting any lead out of it at the moment. And when I look at that style of formation, it feels that there is risk to the top side. And that's where I'm thinking US dollar will eventually go. So just looking for that movement to the top side there. But it hasn't broken out there because momentum indicators are pretty hard to find what is in fact actually happening. So we'll just have to wait and see, I guess. Have a look at some of the others, some of the commodities. Crude oil, right under pressure again. Now look at this. This is quite interesting. Up on obviously the Bernanke comments. Bernanke's issued further comments that he'll be there, but the chances of the economy slipping back into more of a recession is a little bit more remote. As a result of that, wham, absolutely slam dunk. We've got DOE data today, and obviously a breakthrough that 70-80 risks more losses to the downside. So keep an eye on that. As a result of that, also copper came under pressure, 336.40. Remember, if you look for stimulus, then there's a chance that there's no stimulus, then the market's just got to turn around, and that's what it did. Gold did well to climb higher. Broke out of that consolidation after one move, but now it's just consolidating again. If it takes out that 1240, then the chances are we do have a top of some importance. If it doesn't, just stay here, then still be a bit aggressive, but then I think that's really about it for the time being. Let's see how that unfolds. Just have a look at a little Aussie battler. As you can see, straight up, straight down, finding support around these levels here. Looks to, as you can see, it seems to be working in time with economic recovery, because we're seeing this with a couple of the other commodities that the local Aussie comes down. We saw it obviously with crude, same sort of thing, that just can't hold it. Anything affects global growth will probably affect the Aussie. Okay, the local share market. And it has held up well, and look at that. That's, well, the first half of it's like the Aussie. Let's see whether or not we should get a movement back up by about 1%, as you can see. And if it takes out that 4,450, happy days. Let's see if it does do that, because then we know that it goes higher rather than lower from those levels. As you can see, that daily chart there shows that there's a good chance that we do have a low in place, and then we'll start to challenge higher from here. Okay, everything else, let's have a quick look at just a few other things. Then we'll look at the economic indicators. There's soybeans, a little bit of a dip there, which was good. That dip has allowed us to actually get on board, so we're quite happy with that. We actually got on board down here. We saw that rally. Then obviously she's come back, so we're pretty much about break even. But as long as it stays above this area, we still like that trade. That is a trade that we're on. We are long soybeans, but obviously you can see quite a hiccup there, but let's see what happens. Our stops are about 9.95, just so everyone knows. Okay, that's pretty much about it. In terms of economic indicators today, GDP is a big one in Australia, and PMI, and in China. GDP probably expected a much better number, 0.9, and that puts the annual around about 2.8%. A number greater than that the market will probably like, and probably see, and that's why I think we've got some support in the equity markets. Concerning some of the other data, PMI across Europe, we've got obviously ISM, manufacturing and prices paid in America, construction spending, all very important. Got all the energy data, and also got minutes from the Fed. No, that was yesterday, sorry. So we also got domestic vehicles. So that itself will be quite important. So really that's about it on that front. In terms of positions, we haven't got a lot on. In fact, we've only got soybeans. So let's see what happens there. And obviously look into a few other markets. But very volatile, very different to trade. So I guess the idea is just conserve our capital at the moment. That's about it from me. Hope you all have a good day, and we'll certainly talk to you tomorrow. Bye for now.